Very nice.
Hey everybody, this is Lorelia coming to you today. The topic at hand that I want to talk about is the FICO resilience score. So the reason why I wanted to do a video on this because, I find it very interesting that I talk to people on a regular basis, and one of the main things that people don't seem to understand is the correlation between your personal FICO score and business credit, business funding. Of course, there's a lot of information out there in the marketplace that really has people believing that they can somehow magically get access to 25, 50,000, 75,000 in business credit, and they can totally ignore their personal credit. And so let me, explain to you, who I'm really talking to, because at the end of the day, there's two types of information that's out there in the marketplace when it comes to business funding and business credit. There's those who truly believe that if you build these net 30 accounts, somehow or the other, you're going to get all this access to all this credit. And then there's those who want to tell people that you can somehow go from a 500 credit score to a 700 credit score, and in between doing that, somewhere or the other, you're going to get a windfall of funding. And what happens is that the individuals who kind of listen to that information, what happens is they end up chasing their tail for a certain period of time until they get tired and say, enough is enough. Now, one thing about me, on this channel, I have over 400 something videos talking about personal credit. The one thing that I've always did is I always tell people and show people the source. I always say, hey, don't even take my word for it. Don't believe me. I'm going to take you to the source. Because what a lot of people don't understand is that those who are trying to tell you how you can get access to business credit or business funding, a lot of times, number one, don't really have any relationship with any lenders. They have sold you on, and a lot of times is your business credit gurus. They've sold you on that you can primarily just, build these net 30 trade line accounts. And it's to the point, it makes my teeth itch. Because what happens is that you can get all the vendor trade lines you want. You can have that paydex score above 80. And if your personal credit is in the dumps, you're not going to get access to no money. And so what I'm going to show you, like I said, don't take my word for it. I want to show you, and I've told people this all the time, because people want to really know what is the correlation between personal credit and business credit, and how is FICO. FICO, remember, is the scoring algorithm that provides scores to the credit bureaus. Remember, the credit bureaus don't create a score. They get their scores from FICO. The credit bureaus, on the other hand, they house all your information. You get your score from FICO. So when it comes to credit scoring, when it comes to you wanting getting access to business credit, business funding, understand that there's a blueprint on how to get there. That's what I primarily try to tell people, because they kind of come to me thinking that it's some magic to this. Okay, what's the magic trick? I recently had credit repair. I was a 500. Now I'm a 700. Got my net 30 accounts. Got my vendor trade lines. Okay, where's the money? So what I'm going to do is I'm going to actually show you. Like I said, don't take my word for it. I am actually going to share with you, if you are looking at my screen, It says, what is the FICO Resilient Index? Understand, there are many factors that create and give you a score. Now, I want you to see it for yourself, because this is what I know. The lenders, if you're working with any, they're not going to tell you. Your business credit gurus, they're not going to tell you. So I know that what I'm providing in the marketplace, it doesn't exist. Because the reason why it doesn't exist, because one, a lot of people who are online are really just rehashing what they've heard other people say. And two, if they have any success with themselves with getting business credit, that has worked for them, for their personal self, but it doesn't translate on how it can help you. So what I want to share with you, if you look at the beginning, it says the FICO Resilient Index is a tool designed to be used by lenders to predict how resilient a person's, I should have turned that off. To predict how resilient a person's credit may be in the event of an economic downturn, including either a national recession or regional downturn. What does that mean? Now, I've been saying ever since last year that with, with the rise of AI, artificial intelligence, that you can't trick the system. I don't care who your personal credit guru is. I don't care how many success stories. I don't care if they put themselves on a pedestal or they know everything when it comes to personal credit, or you have your business credit guru and they're saying that they're the pioneer and they did this and they did that. At the end of the day, no human is smarter than AI. And so all last year, I have been telling you that with the rise of AI and as AI begin to be, make more of an impact, FICO 9 or FICO 10, I forget, is coming down the pipelines. It's going to be coming this fall. And so FICO is going to be using other measures to be able to give you a score. In this particular article where it talks about the FICO Resilient Index, be very cautious while you're in this season of what is called a pandemic and what you decide to do when it comes to your personal finances. Because don't think that you can somehow trick the system, make mistakes, and just think you're going to bounce back when everything is over, whether we be in this season for 5 years or 10 years. Because what is happening is that FICO is getting so sophisticated, because with artificial intelligence, that they are measuring behavior. They're measuring consumers' behavior even now during this pandemic. If you read in the rest of the article, you can go right on myfico.com to find this article. And it says that consumers may have different levels of resilience to an economic downturn depending on an individual credit profiles. Some consumers will be able to weather an economic downturn better than others. Lenders, you hear that? Lenders may use this index to identify consumers that are more likely to pay as agreed in the event of a recession. Now, what is very important is that if you subscribe to MyFICO, now understand, I'm not even no affiliate, so I don't have no affiliate link to give you. If you want a true measurement of your credit score, now this is for those who are rebuilding their personal credit, and it's for those who are really trying to get access to business credit and business funding. You want to know where you stand. Your true score is with MyFICO. Is of course not with Credit Karma, because we, at this point, if anybody watch my channel, they know that those are FICO scores, fake scores. And they're not with any of the other third party outfits that are out there. There's no need of me giving names. But if you want a true score, you really want to go to FICO, because even if you get your score from the credit bureaus, they may tell you, some of the bureaus will tell you if they pulled it from MyFICO, but the reason why you truly want to get it from MyFICO is because you're going to get other data and analytics that will help you to understand what lenders are looking at, so you can have a blueprint to be able to get funding. So you're not at the mercy of lenders. Because see, a lot of people come to me thinking that what I'm going to do is show them some type of magic trick. I'm not the magic trick person. I don't do no tricks. I don't have no slick way of doing stuff. People want to sell people on. I got this, this strategy, this trick, that some way you can have bad credit, but still get access to $100,000. And that doesn't work. What I share with people, what I teach people, the reason why I can guarantee to help people get $25,000 more in funding, reminds you, those who are coachable, everyone's not coachable. Everyone does not want to listen. Half of the people have had bad credit for 10 years or longer. Then they come to you and then they're looking for you to give them a magic trick. But with that being said, if you go and you enroll in MyFICO, like I said, I don't get paid for it, not an affiliate, not a sponsor. I'm just someone that's really trying to teach people the same way I was able to teach people with personal credit and how to deal with debt collectors. I'm doing the same thing with funding, because I noticed that people are out there, they're chasing their tail. There's so much misinformation. Your business credit bureaus ain't telling you how you need to analyze your personal credit score. They're telling you to go get vendor trade line accounts. And then you're wondering why you still not getting access to cash and credit lines. But anyway, if you do enroll in a MyFICO, there you're going to get the analytics and the data that I've been saying for the last 3 minutes. But you're going to get your FICO Resilient Index score. And it ranges from 1 to 99. And so within that 1 to 99 range, the higher your number, the worse you are, meaning that to lenders, you look like that you may be a person who can possibly default on your credit. So understand that the FICO Resilient Index score goes from 1 to 99, higher the number. If you're closer to 99, you're more of a risk to a lender. The lower the number, you seem to have a very good handle on your finances, and that lenders don't really look at you as a risk. Now I want to ask you this. Are your business credit gurus telling you that? Are they sharing with you the importance of the FICO Resilient Index score? How was the index created? To create the index, FICO evaluated hundreds and thousands of anonymous credit profiles from several points in time, including before and after the Great Recession. We looked for patterns in consumer profiles who ended up missing or making payments in the Great Recession. Now, just the fact that they said that they evaluated hundreds of thousands, that should show you that there is not a human on this planet who's able to do that, going that far back to the 30s during the Great Depression up until now. That can't be nothing but a computer. Someone wrote the code to be able to analyze that data. That's why I said you're not smarter than AI. There's not a credit professional out here who's smarter than AI. Now, this is the very important part. It's different from your FICO scores. FICO scores are designed to predict credit risk depending on the economy. The FICO Resilient Index is not designed to measure consumers' current credit risk, but rather to predict consumers' resilience in the event of an economic downturn, including either a national recession or a regional downturn. Let me just share this with you. Back in the fall, I watched a very important webinar that FICO had. I should have, I wish I had, I should have put up the PowerPoint, where, let me see if I can find it here on my phone. But basically, FICO was already predicting, yes, here it is right here. It was called the next recession prepping, adjusting the FICO score for economic sensitivity. That particular webinar I saw in 2019, which was, of course, 6 months prior to the current pandemic we're in now. How is it that a credit scoring algorithm company was able to prepare for the economic downturn because of cycles, economic cycles? That is what they were able to measure based on what the market was doing, based on consumers' I want to say activity, but that's not the word that I want to use at this moment. But I want to also point out, it said that lenders will likely use the FICO Resilient Index in combination with FICO scores and other information. Lenders can use this to identify credit risk for people within a FICO score range of 680 to 700, for example. In the face of an economic downturn, put another way, in this example, the FICO Resilient Index answers the question which consumers with FICO scores between 680, I've been talking about 680 for about 2 years now, and 700 may be more likely to consider resilient in the event of an economic downturn. Remember, I talked about that resilient scoring index? Well, the best score that you can get is resilient. Remember, I said the score goes from 1 to 99, 1 being the best score that you can get in that range. You're also considered a resilient consumer. So understand there are dynamics to your score. FICO just told you. You want to go to the source? It's right there. The credit bureaus aren't even telling you that. They're looking at your FICO Resilient Index, and they're looking at the FICO score. And it later goes on to say what the most resilient consumers look like. These are the better consumers. The most resilient individuals, those who may be less likely to be affected in the event of an economic downturn. Maybe those who tend to have a mix of different types of credit. Then I talk about that credit mix. Your business credit gurus aren't telling you that. Your credit professionals who've taken you from a 500 to now a 750, they didn't explain nothing about credit mix. They didn't explain that because they sold you on, they wanted to give you a high score. Let me continue. Lower balances, a longer credit history, fewer active accounts, less activity searching for new credit, and a history of paying bills on time. Doesn't that sound like something I have been saying? I've been saying that for the longest, but that is not popular wisdom. It later ends with saying, how will lenders use the FICO Resilient Index? Each lender will determine if they want to use the index and how they will use it. For example, some lenders may track and monitor their customers' index so they can more quickly reach out with solutions and programs to help the customer make more informed credit management decisions. So at the end of the day, lenders are using this to also manage credit default, because if they are seeing something is not too comfortable with a particular consumer, they want to be able to get on top of it right from the beginning. Right from the beginning. So now how does this all tie into personal credit, business credit? It all comes together because understand, if you truly are someone who is looking to get access to business credit, business funding, and you truly have been sold a bag of goods that your personal credit don't matter. I'm showing you right here. I'm doing this video to show you with your own eyes, for you to read at your leisure, for you to understand. Because understand this, please Please, someone, show me that business owner. Reach out to me by email, make a comment under this video of that business owner who has bad credit and all they did was build vendor trade line accounts and they got 50 plus and business lines of credit. Please let me know, where are these people? Where are these people? And don't forget, and they didn't do anything illegal too. Where are they at? I doubt it if they exist. But once again, if you are someone who is really serious about getting access to $25,000 or more in business credit and business funding, reach out to me. But before you do that, I want you to make sure you watch free webinar that I put together, access to capital for 2020. Go to bizcredit.yourmoneymentor.com. Understand, I usually get a lot of people who reach out to me, and unfortunately, I can't work with everybody. Some people just don't really meet the criteria, and they're not really ready now. And then some people are just, I don't know, they're just in la-la land and with thinking that something magically is going to happen. And usually what I tell those people, go back to your business credit guru, let them find you this $200,000 that you want a business credit because you built all these vendor accounts. But once again, this is Lorelia. I hope this has been helpful. Like I said, the FICO Resilient Index score can help you with your personal credit, can help you with your business credit. And, hope you found value in this video, and I will talk to you in the next video.